All right, folks, today we're taking a look at IWM, the ETF that tracks the Russell 2000. And if you're paying attention to any of the indices, you'll notice that it has been lagging its peers, most notably the NASDAQ, which has been on an absolute tear, as well as the S&P 500 or the SPY. Coming off the heels of Tuesday, July 7th, we closed down about $2.50 or a little over 1.75%, with the rest of the indices following suit, putting in a wicked little reversal on the daily chart. So looking at this daily chart of IWM, you can see that we've come back up into resistance. We're kind of at a junction point here where the market looks like it may be at a point ready to turn. We've since come up from the March low, tested the 786, rejected back down below the 200. We've been jostling around that area for the better part of June, as there appears to be a lot of indecision on the next direction of the market. We look at a weekly chart, we can point out some significant reference points, basically just price structure, where the market has served as resistance and or support, and we've got a lot of clear levels here. Remember, it doesn't have to be anything too sexy or complicated. It's something that sticks out to the naked eye, and we can see that this resistance now becomes support, now becomes support, now becomes support. We did get a breakthrough here in December, but has pretty much held this area for the better part of 2019, and now we are at an indecision point here in 2020. So we go back to the daily chart. We've come back here into this level in June, traded into it a handful of times, could not quite muster enough strength to get the breakthrough, or more importantly, the follow through to take out these last swing highs in early January. So now we've got a situation where we have lower highs, lower highs, lower highs, and lower highs. And with today's reversal pinning right down here into this longer term trend line, leads one to suspect that we might be at a period where we're ready to break. Well, what does that mean in terms of seasonality? If we take a look at our smart stock scanner, we can see that we have a bearish trade setup looming right around the corner. Now, when we trade seasonality, we know that most of the time we don't have to trade on the exact date, meaning entry or exit point. We can set alerts before the fact, giving us a heads up that, hey, we may be at a point in the markets where we have a high probability seasonal sell setup or a high probability seasonal buy setup. So here we have a trade that's coming up here in mid-July, starting on or around 7/15, end date of on or around August 17th. 80% win rate over 10 years. The last 10 years, this trade has worked out 8 of the last 10 times. These are trades that I like to trade alongside with. So you can see a breakdown year by year, relatively modest drawdowns with the exception there in 2016. But our equity curve is pretty juicy if we take in this trade from inception over the last 10 years. Furthermore, to illustrate from another visual perspective here, we can see that right here in the Russell or the IWM, that on a 5 and 15 year historical contract basis, that we do indeed top out at this particular time of the year, which is around July 15th, and we trade to the downside through the better part of July and into August. And knowing where we are from a lofty level standpoint, and knowing that summer to late summer months often brings volatility, we do like a low risk trade to the downside. First targets at 132, and the next targets here at 125. With initial risk above the 150 to 155 area. That's going to be on IWM. So look to establish call credit spreads and or buy put or put spreads, depending on how you trade. If we do indeed get that crack below the trend line, preferably a couple of retests of that trend line before we jump down to the short side. So hope that helps. Good luck, good trading. We'll see you on the next update.